Hey, Bulls and Bears, you're watching Bull, Boom, Bear, Bust. Back with another dose of you know what. Let's go ahead and get right into it. We've got a lot of news and analysis here to get caught up on today. And by the way, it is Wednesday, January 11th, 2023. And in this report today, we've got some news, but I want to connect a few dots here. I want us all together to connect a few dots and put some pieces of this puzzle together. Now, on this channel, I've warned from time to time about outages and how you should have some money out of the bank, how you shouldn't be all in a institution, financial institution, for example, that can just go dark. There can be outages. And for an example, another recent example is the airlines. We had the most planes down here just recently, just today and yesterday, since over 20 years ago with the events of 2001 there, September 2001. And a lot of people would, before that happened, they would say, no, that's impossible. They've got computers, they've got systems that, backups for all this stuff, backups, So people think about that also with banking. They think there's a backup. Oh, FDIC is going to be there to give me my money, the same day that the banks go out. It's not going to be that convenient, folks. You'll be lucky if you get your money at all. The FDIC doesn't have enough money to cover everything in deposits. Now, they may print it up at the time and created at that time, but right now the money is not there to cover all the deposits. FDIC came out just in the past couple of weeks, and videos out there talking about FDIC actually talking about how to make a big announcement to the public, that they need to do it on a Friday night, and people are assuming that's because banks are closed and the weekend's coming up, so there'll be less likely to be bank runs. And those are things that people are coming to a conclusion on, that those things were said at the meeting as far as how to make a big announcement is what they're calling it. So question to you, FDIC, think about what they do. It's Federal Deposit Insurance. They're going to hopefully try to give people their money once it's lost in a financial institution. So why would they be having a big meeting talking about making a big announcement, right? And for those that just think that this is crazy talk, that, nothing's going to ever happen to the banks, nothing bad is ever going to happen, then why is FDIC even there to begin with? All right, it's there because of a failure in case the funds get lost or hacked, or who knows what could happen. But put these pieces together and please tell me what you think down below. What is all this adding up to? I see a big outage in the banking system coming here in the next couple of years. I don't really see it going much longer because something has to break to blame the failure of the system on. Basically, there's so much debt out there that we're going to see so many people in financial distress and dire straits that they're going to need something big to, I think, cover that up, if you know what I mean. They're never going to say, oh, by the way, this system of creating all this money, it's a bad system, and it's the fault of the system. And actually, I don't think it's just the fault of the system. I think it's the consumerism that we have as Americans, that people just want to spend. It's to the point now, though, where people are spending just to survive. It's no longer just entertainment spending and non-discretionary spending. It's groceries on your credit card. It's pay your utilities on your credit card, pay your car insurance on your credit card. Not that there's anything wrong with that. You get reward points and you earn, cash back for using your credit card, but people are paying their card off in full less and less and less as we go along. Speaking of that, take a look at this, another big bump in household debt. And people think that somehow lending is being diminished or discouraged. Well, if that was the case, then why is debt still climbing? This is out of Changing America over at The Hill. And we see household debt now has risen to $65.5 trillion. That's trillion with a T. And that puts the average household debt at more than $165,000. So every household on average, not all of them, because some have zero debt, some have a lot more debt than this, but on average, if you average it out, $165,000 per household in debt. And that comes to us from a study out of NerdWallet. And this article goes on to say that people are now spending or using credit cards to spend for necessities now more than ever before. All right. And again, combine this with the higher interest rates, the fact that more people are not going to be able to pay off their card in full each month with the higher interest rate. We're talking 20, 22, 23% annual interest rates on these. So it's going to be a matter of time before the house of cards comes crashing down, folks. It's going to be this year, 2023. I don't see us getting out of this year like we skated in 2022 with all the shutdowns and everything else. That was with just unprecedented rescue programs, stimulus checks, etc., forgiveness plans for rent, for mortgages, utilities, and in fact, 20 million households still are on the protection program to prevent them from getting their utilities cut off. Think about that. So we never recovered from 2020. In 2020, at that point, we had not recovered from 2008, the financial crisis, and it's just going to get worse and worse and worse. Also, what do people typically do before they go into bankruptcy? Well, a lot of times they'll just go ahead and just start spending like crazy, knowing that the debt's going to be written off anyways. And we're seeing this. We're seeing this unprecedented increase in the amounts of debt. Yes, because prices are higher, but to me, it also looks like just a last gasp and just people just swiping whatever they can because they know that bankruptcy is basically knocking on the door. That's my take on it. Again, please let me know down below if you agree, if you disagree, if you want to add to what I'm saying here and my thoughts on this. All right, but let's go on to some other news here. Now, some of you may have seen this because I put this out yesterday, and this is Jerome Powell. Now, I wish instead of adjusting rates that Jay Powell here, Jerome Powell, Fed chairman, would actually start a produce farm because of the cost of eggs, and that would be a real, in my opinion, a more useful way for Jerome Powell to actually help the people instead of just adjusting rates and tinkering with rates and talking about the future rate adjustments that are going to happen. Now, I'm putting this out on Wednesday. Tomorrow is the big announcement. I shouldn't say big, but the monthly announcement. It's going to be a big number probably. Monthly announcement of inflation. The CPI number is going to come out tomorrow. Now, remember, they're going to try to spin it most likely. So if it's lower than the previous month, they're going to try to tell you that inflation is coming down. But you know that's not true, right? You know that this just means the prices are going up just more slowly than they were the previous month. All right, so don't be tricked by that. I think most of you are onto that by now because I see your comments down below how it's pretty much a scam number, just like a lot of the numbers that come out of the talking heads here, the powers that be, trying to fool the masses, and most people probably are fooled. But think about this. I mean, with all the money that we're creating and all the debt issued and all the assistance we're sending basically all over the world, why do we have shortages of anything? You would think that we could start up a bunch of new egg farms with all this money that we're spending. But no, that's not happening. The things that really help people and would bring the cost of living down are just not happening. I said this before, the Fed, they can't print eggs. And we're going to see more shortages and more rising prices coming up, especially for food and energy. So fasten your seatbelts for that one and take caution and be ready for that. Now, remember, when something snaps, it's likely going to be an outage, and I'm talking about the bank outages again and the bank closures. It's likely going to be a extended period of an outage, in my opinion, because they're going to be ushering in a new system. The dollar's at the end of its days, and I think the people behind it know that. The globe is starting to wake up to that as we have these BRICS nations and other nations now joining BRICS nations in trading outside of the U.S. dollar. And I think that precious metals is going to play an important role here in the monetary system in the future. But before that, they're going to try to bring in something pretty nightmarish, in my opinion. And we're going to see, like in America, we're going to see what's happening in a lot of other countries where people are basically revolting against the poverty, the inflation, the cost of living, the costs that they're being asked to pay to keep things running, if you know what I mean. Just what's happening with all this debt issuance is just it's basically madness. And something else that we've been warning about here on this channel, there's an article out here, a recent article out of The Atlantic. The buy now, pay later bubble is about to burst. And these are very small purchases that people are basically financing. It's kind of like a layaway. It's a modern day layaway. I think layaway went away with Kmart. But it's a modern way to finance things instead of a credit card. Of course, you have a credit card, but this is a a thing that's offered when you go online and buy something. I bought a $60 microphone on Amazon, and they asked me if I wanted to make 4 easy payments of whatever it was, 15 something dollars. And a lot of people are doing this in addition to all this credit card debt. So I think the debt's actually even a lot worse than what we're reporting on here. And I know that seems crazy because we really do paint the real picture here and show you how bad it really is. But I think it's even much worse than myself and a lot of us realize. All right, so maybe check this article out. Again, it's out of the Atlantic, but it's not going to be much new information. It's going to be just underpinning a lot of stuff that we've spoken about here, right here in this channel. All right, let's move on here. We've got more big layoff announcements. In this case, it's the mighty Blackrock. Blackrock plans to cut 500 workers after last year's market downturn. So even these powerful financial institutions are not immune to layoffs. And it doesn't matter how wealthy the CEO is. It doesn't matter how much money they've made. The layoffs will be the first thing that people do to cut costs. Cost cutting equals layoffs in most cases. That's what companies do. And you can bet instead of doing salary cutting to the top level people there, the CEO and the executives, no, they're not going to cut their own salaries. They're going to lay off people first. Folks, bottom line, the entire financial structure that we're in right now is unsustainable. It will be replaced with something, whether that's something even worse and more dark and more sinister, or something better. That's yet to be seen. I think we're going to see one before the other. I think we're going to see something much worse first, as the controllers try to come in and sell you something, telling you that it's better, that it's going to be more secure, that it's going to be less likely to be hacked or taken down, or go black or go dark, and they're going to sell it to you or try to sell it to the masses. But I think we all know at the end of the day, the only thing that's going to prevent this madness is going to be precious metals and sound money. Will we ever see that in our lifetime? Yes, I think so. I think it's not. I think it's in the not too distant future. So that's why I say keep stacking. Also, food preparation in case there is that outage, because when the banks go out, people realize they won't be able to get their money, and most people have zero out of the banking system. Most of the time, it's just swiping the card as they make their purchase. I'd say, I don't have a statistic or a study I've seen on this, but I'd have to say 85-90% of people have so little money outside of the bank that they wouldn't be able to make it for more than just a few days. So therefore, you're going to see a lot of people going into the stores and just taking whatever they can, and it's going to be madness if this ever if the airline outages that we see also play out now in the financial system. So it's going to be interesting, folks. It's going to be dangerous either way, but we're going to be prepared for it no matter what happens. So let me know what you think down in the comments about the outages, about the FDIC meeting. What are they getting ready for? So much to talk about here. We're going to come back, though, with another report for you probably tomorrow. Thanks, everybody, for being here. Please smash the like button for us if you like what we talk about. Thank you, everybody, for your support. We hope to talk to you very soon, and I'll be back with another report. Big love. Bye for now. Keep stacking and